On December 16th of 2019, I made my very first investment into the stock market. I had no idea what I was doing. I wasn't really sure where I was going with this. I didn't know what my goals were. I really had no clue what was going on. All I knew is that there was a way to make passive money through the stock market, and that was all I knew, and that's just all I was chasing. Over the last year, I've picked up a whole bunch of different lessons. I've made some mistakes. I've had some successes, and in today's video, I really just wanted to dive into that. It's been a crazy year, obviously, with the pandemic going on, with the stock market reaching such high highs early last year and towards the end of last year, and it's just been a roller coaster, lots of ups and lots of downs, and I really wanted to bring that to you guys in today's video. Today's video will just be about all of the lessons that I have learned over my last year investing in the stock market. I think there's a lot of value in this because some of you guys may just be starting, and hopefully if you guys cannot make some of the same mistakes that I made early on, I think that could be super beneficial. If you guys do enjoy this video, if you found it valuable, if you find it entertaining, or any of the above, you can let me know by smashing that like button. It helps the channel grow. We're growing and growing and growing. The fact that over this last 6 or 7 months we're already pushing up on 1.2 thousand subscribers, it's just a phenomenal feeling, and I really do appreciate the love and support you guys show me. If you have any suggestions for videos, anything you'd like to see, you can let me know in the comment section below. And if you do enjoy the channel and if you find value in it, you could also let me know by subscribing. But with that being said, let's go ahead and let's jump straight into the video. Now, as a beginning investor, the one mistake that I felt like I made the most, and something that I didn't really understand at the time then, because it just wasn't really seem like it was talked about enough, was the fact that you do not need to rush. Now, this might be a little bit contradictory. You hear some of those investors say, just get in, just dive in the stock market. Time in the stock market beats timing the stock market. You just need to get in, and the more time you spend in it, the more money you can make. And yeah, that is true. All of those things are true. But there's one exception to that, and that's actually doing the research. It's actually knowing what you're getting yourself into. Because yeah, you might throw all your money into a company and it's like, well, if the longer I'm in the market, the better I'm gonna do, and the more compounding that can happen. And that's only true if you're picking good stocks, right? Because what will happen is some investors, they'll get so excited and they'll be ecstatic, like, oh, I'm going to go in here, I'm going to invest all this money into this big hyped up pharmaceutical company that I've been seeing all over Reddit, and I'm going to make a whole bunch of money, and it's just going to be the time of my life. I'm going to change my life forever. Well, you got to realistic up a little bit. You got to understand that it takes a lot of time, it takes a lot of energy, and it takes a lot of research to really pick the right investments, especially for person to person. Because you can go ahead and see some people doing really well on certain stocks, certain pharmaceuticals, and all these different things, but maybe you can't handle the volatility that they can, the same as them. And so with that being said, the whole point behind this first lesson is that there's no need to rush. Sit down. Whenever you first decide that you're going to invest in the stock market, figure out exactly what you want to do and what your goals are. Because if you just throw money into it like I did, you're not really going to have consistency. You're going to just put money in every now and then, or not put some money in at all and then take some time off. And it's going to be weird. Because whenever you align your goals with actions, then you really will start to see consistency. And that's whenever in the market itself, especially nowadays, having that consistency will pay off in the long run. And so the first lesson is do your research. Figure out exactly what you want to do. Look for the right companies for you, not just hyped up companies that you see everyone doing. Companies that are right for you, and use those companies, use that research to make solid investments that you think that will last a long time, and you have faith in. You have faith investing your money, and you're not worried all the time that you might have picked the wrong investment. Now, another lesson that I've learned that has costed me a lot of money, and I'm not gonna lie, it's a very frustrating one to learn, the hard way, as some people do say, is, trading off of emotion. There are investors who are gonna be stock traders. There are gonna be people who just invest in, these companies. And then there's gonna be the people who want to buy into a company, sell out the company, buy into a company, sell out of the company, trying to make small profits. Now, I've done both. I've been on both sides of the coin. I'm a long-term investor now. I don't really do much trading anymore, but there are some traders. I know there are a few traders who watch this channel, especially back in the Vecto IQ days. And, to those of you, one big piece of advice that I will give is to not trade off emotion. Now, of course, it is much easier said than done. You will start to see a lot of times where, you have the fear of missing out, and you see a whole bunch of people making money off a certain company. So you're like, oh my goodness, I got to get in. And deep down, you're like, this isn't really my company, but everyone else is making money. So I'm going to just go ahead and go in there. Then you invest your money into it. It falls like 10% the next day. You panic, you sell, and you just lost maybe $100, $1,000, etc. Those type of trades, those types of deals where you go against what deep down probably isn't the best idea. Whenever you use those emotions as fuel to actually make your investments, you will start to see a lot of failure. I'm not even gonna lie. Now, of course, there are always gonna be moments where you notice things and you have to be what's the best word? Maybe like instinctive, and you have to just immediately react to a situation. But that's not the same as being like, oh, everyone else is doing good, man. I'm jealous of those guys. I'm jealous of these people making money off this pharmaceutical company. And I use pharmaceutical companies because they're the ones that just go all over the place. But I see everyone making money off this, this random company right here. I gotta make money off of them. I gotta be in this club because look how well everyone else is doing. And then, like I said, when you go in, if it goes down at all, they're holding on for dear life because they're like, well, realistically, I'm up anyway. But you who just invested, you're like, man, I just lost 10% of all the money I just invested. I want out. And it's really not healthy. It really will lead to a lot of stress. That's something I dealt with. I will share a story with you guys. I do have a video I posted maybe about 4 or 5 months ago about this, but I will share the story again because now looking back at it, it's even more ridiculous. So the story all takes place around Vecto IQ, or the company that then merged into Nikola. So at the time, whenever it was about June-ish, I'd like to say, Vecto IQ was a hot topic. Everyone knew that this merger was happening soon. SPACs were off the charts at the time. Everything was just, SPAC, merger. And people were making loads of money off of these mergers. Well, at the time, I was still pretty new to the trading scene. We were in the middle of the pandemic, so I was just looking for anything I could do to make, not only have fun, but make some extra cash. And I was very dedicated to figure out how I was going to make some money off this company. Well, I don't have the exact numbers because it's kind of hard to find the charts of exactly what happened. But basically, in a broad sense of things, Vecto IQ was doing super duper well. Everyone was making money off of it. I knew people in my Discord group were making loads of money off of it. I knew one guy, he was up like $4,000 or $5,000 in the course of like 2 days. And I got jealous, honestly. Over the course of that whole 6 or 7 months I had been, investing and trading, I never invested in the companies like these not established, these more, thought-based companies. They're not even really in motion yet. They're just kind of like a thought. And I never invested in them. I didn't trust them, and I felt like it wasn't a good investment for me personally. But seeing my friends go and making all this money from it, of course, I started to get a little bit emotional. I had that bit of jealousy. I had that FOMO, that fear of missing out. And I went ahead and I invested into Nikola. I would say I bought about 50 shares or so at about $24, and this is where the mistakes began. This is where everything went wrong. Well, I invested that money. I invested somewhere around $1,200. I saw it actually climb up. It went all the way up to being about $29 to $30 per share. And I thought, wow, I did it. After seeing my $1,200 turn into about $1,500, this was the best trade I had ever made. I was super duper excited. I was like, man, this thing's going to 50, 60. I'm going to double my money. I'm going to be set. I'm going to use this money to help pay for my tuition next semester, maybe pay down my car note a bit. I was getting super duper ahead of myself, right? And this is where I made my first mistake, is not knowing when enough is enough and when I'm starting to get past the point of realization, like being realistic. Because at the time, I was like, man, nah, this thing's going to 50, 60 with no faults. It's never going to drop again, whatever. Looking back at it, if I go up 30%, 20 to 30% in a single day or two, I'm getting out. It don't matter what company this is, I'm getting out of it. Because realistically, it's coming back down. But this is not the big mistake. The big mistake is whenever Vecto IQ took a dive. Over the course of the next couple of days or week or so, it went from being about $29 all the way down to about $21. And this is where I made the absolute worst mistake I could have made at the time. I decided that I was tired of seeing myself lose money. I went from being at $1,500 down to being at like $800. I was upset. I was done. I was so annoyed that I was like, you know what? I'm getting out of it. I want nothing to do with it. And I just sold right then and there. I sold all the 50 shares that I had, and I was completely over it. And then, of course, if you do follow Vecto IQ, the merger happens a little while later. A few weeks later, the stock's at $60, and I was sitting there sad that I sold my way out, right? Now, the thing about this is, and the reason why I feel like a lot of these things are mistakes, is because I was chasing the stock price. When it dropped, I would try to follow it down. When it would go up, I'd try to follow it up. I would never really try to beat it, predict it, meet it. I would never do any of these things, and it caused me to lose a good bit of money. I mean, losing $400, $500 is at the time I was 18, so an 18-year-old is a lot of money, especially whenever it comes to something I was doing for no reason. Like, I was investing into this company not because I had faith in them, but because my friends were making money off of them. And they were all sitting high and happy when this thing hit $60 because they actually had faith in this company. And so they held on to it. But me, since I was invested in it off pure emotion, I couldn't bear that thought of losing if it going down to $10, and I sold my way out. And so that was a very major mistake that I made. It was something that I regret every now and then. I really try not to think about it because I think the lesson is it's priceless. But when I would think about it, trade off of real, logical thoughts. Do not trade off of emotion. It takes a lot of time. It really does. There's still times where I see companies popping off, and it takes so much out of me not to just throw like $4,000 or $5,000 into it and see what happens. But I have to be realistic. I align my goals with actions. I figure out what companies I want to invest in. I set my criteria, and I only invest in those companies. And it's honestly led me to live a much more, stress-free life in the market. But just overall, it's led me to not lose as much money as I had in the past. And the very last piece of advice is something that I will have to talk to you guys about in a sense of not even as a YouTuber, not even as a, anything, but just as a friend. And it's something that I had to learn, and it took me a while, but it's to not follow what people do. The hard part about it is whenever you first start investing, you don't really know where to go. And realistically, the majority of the time you end up on YouTube, like you may be watching this video right now. Well, the thing about that is you start to kind of get influenced by what you see other people doing. You might see some of these guys like Ryan or Graham or Meet Kevin and all these different guys who are doing amazing. They're investing in Meet Kevin's investing how much money into Tesla, or Graham's investing all this different money into these different like credit card companies and stuff. There's so much to do. You have other people, the other investors on the on the platform who are dividend investors who will talk really badly about value investors or growth investors, or your growth investors who talk really badly about dividend investors, and they say that it's pointless 7% a year. I can do that 4 times over, fourfold with Apple because Apple grows and doesn't stop. There's always going to be those type of people. And as a new investor, when you see them being successful on YouTube, you take it as like I need to do what they're doing, and what they're saying has to be right. Look, one thing you'll never catch on this channel is you'll never catch me telling you guys how to invest. You never hear me saying you have to grow, invest off growth, or you have to dividend invest, or you have to find the perfect value companies. I think everyone's different. I genuinely do. And as a new investor, as someone who's just coming onto the market, I learned that the hard way. There was one guy I used to watch. I cannot really remember his channel name, to be honest. It's kind of embarrassing, but I can't remember it. And he had a portfolio where basically he had a whole bunch of dividend stocks. He actually put his portfolio down in his description. I literally just copied piece for piece what his portfolio was, and that's what I invested my first $100 into. Absolutely ludicrous, absolutely ridiculous. I would not recommend doing that to anyone because every person is different and everyone has different goals and they can handle volatility differently, and it's just all different. Every investment account should be in line with the investor. You shouldn't just invest money into these companies or into a portfolio because someone else does it, because their goals and where they are in life is totally different than you. But one thing I will continue to say is that the issue with it is that people don't realize it, especially the ones who tend to downplay other types of investors. If you're a growth investor downplaying dividend investors, is that you got to understand that everyone is a little bit different, right? Whenever you look at someone like me, just for example, I dividend invest, value invest, and growth invest. I really see that there are good things that can come from all 3 of those, and it's super duper important to pay attention to which ones, benefit you and what, will get you the fastest to your goal. Because there's some people like me. I'm honestly trying to grow this portfolio, and I'm trying to do all these things before a certain age. So I'm kind of pedal to the metal. I'm investing into high growth companies, the Apples. And some of those, even I have a little bit in Tesla. I think Hyliion can do amazing in the future. I have all of those. But not only that, I want my portfolio to grow, of course. But I'm not going to be investing in really dumb companies that I don't think can really maintain over the long run. So I also have those other anchors, the companies like Coca-Cola, who I genuinely feel can do amazing over the course of the long run. They pay a dividend, 3% dividend every single year, and I think that'll be maintained for the rest of my lifetime. I have a lot of money invested in Store Capital, another company who pays a super high dividend that I find to be super duper reliable, and they also have high growth. So there's a whole bunch of different reasons as to why I'm investing into these different companies. It's not because I'm a dividend investor, so I have to invest in a company just because if they pay dividends. No, I'm different than a lot of other people. A lot of other people are different than me, and that's totally okay. So as a new investor, figure out, again, what your goals are, align your goals with actions. Decide, okay, maybe you're a new investor who has $1 million. Maybe your thing is that you want to just maintain your wealth. You don't want to you're not so focused on growth, it's just maintaining. So maybe you'll invest in more low growth, higher dividend paying companies that, they're going to pay you out a dividend every single year. You don't really have to do much. You don't have to worry about the stock price going all over the place. Smooth sailing. That could be super different than the new starting 18-year-old with $10,000. And so as a new investor, again, Align your goals with actions. Figure out what's right for you. Try not to follow some of the bigger people just because they say it might not honestly be what it is. And figure out what is going to work the best for you mentally, physically, spiritually, and all of the above. I hope you guys did enjoy that video. I hope it, just provided value to you guys. This is a stock investment and financial growth channel. And so I don't like only talking about stocks, especially Hyliion. I know I got off, a little bit overboard with the Hyliion video, so I do apologize for that. But I want to really take it back to adding value to you guys. You are the ones who got me here. Y'all are the ones who put me in the position that I am now. You've given me the ability to grow this channel up to hopefully 10,000, 15, 20,000 subscribers next year. We'll see what happens. But I really do appreciate everything you do for me, and I love being able to give back to every single one of you. If you guys did enjoy this video, you could let me know again by smashing that like button. Let me know any feedback. Give me your tips. Give me your advice. What have you guys learned over the last year, 2, 3, 4 years? Let me know what you've learned down below. And if you are new to the channel and you made it this far, I appreciate you. If you could subscribe, that would be amazing. And I hope you guys have a good day. I'll see you soon. Peace.